We'll just get this rocking here. All right, so today we're going to be talking about one of the particular indicators inside of the package we call the Commander series. And these are very important together and separately, and really understanding how each of the component works with the other is very important. These are exclusively featured on TradeStation platform through the Strategy Network. And if you don't have TradeStation, there are some ways to get TradeStation actually for free through the end of the year of 2014. The platform is totally free, and in fact will tell you how to get these indicators paid for by TradeStation. You can have the whole cost of these indicators actually paid for, which is pretty cool. So we'll talk about that as well today. The main thing here is that when you look at the markets and you look at what's going on with a particular stock, you think about, okay, where is the best place to look at it from a buy point, a sell point, a stop, or a profit-taking level? That's one of the hardest things to do. Well, these particular indicators, whether it's the altimeter that we're talking about today, the radar, and our autopilot, these all give you some very good indications in a way probably you haven't seen before. So let's kind of go through this right now. And then we're going to talk about some actual charts we're going to have that I'll show you. I'll bring them up on the screen so you can see what it actually looks like. Okay, so here's the goals of what we're talking about. And this is really important because one of the things that I really want to stress to you here is that these indicators work. It's not a situation where you're looking at a crossover and maybe it's this or maybe that. These indicators work because what they're really focused in on is the whole idea that, you know, there's a level that there's a stock being bought and there's a level that's being sold. And when we look at that from a volume standpoint, because that's really what matters here, it's all about the whole idea of where are the institutional players, where are the individuals buying and selling, where is their line in the sand, where are they willing to say, okay, you know, I'm willing to take it down to this point of support and buy there. Like, for example, we saw what happened with Apple recently. Apple came right down to its support and then started to move higher right off of that and bounced off it and kind of drifted higher. And we're going to show you where those levels actually are. They're a little bit different than standard trend lines. This particular indicator that we're going to talk about today is one of the easier ones to really understand because it's simply, you know, you just look for a level and you go from there. Now, these indicators that we have that you can put on your charting package through TradeStation, we call them smart indicators because they're basically not only just an indicator that kind of trails along, right? You see like a moving average is a trailing indicator. You look at many of the ones, even the crossovers, depending on how fast or how slow you want your stochastics to be. Bollinger Bands, again, just following along the market and kind of going through all the list of the various indicators. They pretty much all act the same. They all pretty much have this whole concept of, okay, you know, what has happened and where's the trend going? Much different here. So these are really algorithmically based. In other words, we create an algorithm that will modify itself on a continual basis that is going to give you some trading signals. So it's much more of a look ahead as well as a look back. So it gives you the broad range of all the parameters. This particular indicator helps you, if nothing else, with one major issue. It says, where don't you want to be on a particular position? So, for example, let's say that there is a position that is moving in a certain direction, and it's been choppy, it's moving around. Well, where's that line where, okay, I want to be short, I want to be long, I want to be in, I want to be out? So you can say, hey, if it's above this level, I don't want to be short or I don't want to be long. It eliminates one entire concept, if you can follow it, of saying where you should be on this. Very important concept. It also looks to maximize the idea of risk and reward because, of course, that's what we're trying to accomplish as best as possible. You want to find where those situations are that you have the highest level of reward possible, but, of course, the lowest risk. I mean, that's obvious. Of course, that's everybody's goal here. So the thing is that when we look at this particular thing, this particular index, I'm going to show you how it looks. We have some lines drawn, very simple, straight lines over a period of time that give you the support, the resistance, and a breakout level or a breakdown level. And the color's a little bit upside down. Usually green would mean go, red would mean stop. This is a little bit different because the green is the hardcore support level if you're on a long position, or resistance technically if you're on a short position. And it gives a very clean line there. And we have a center line which is a very important level, and I'll show you what that means, which is the point of control. And then we have a breakout level. So now, let's talk about a little bit further what this really is. Okay, so here we're going to basically give you the opportunity to have a higher probability trade, and at the same time, you're going to have we're using this concept of what, a flight plan, a concept of you're in a plane, and that's why we have all these things named for aeronautics. So you're in a plane, and you know what the safe flying zone is. What is that level that between this level of your altitude and the lower point of altitude, where's the safe flying zone? And what happens if you come down below that? Well, you can crash, and if you go above that, well, you could be problematic too, or at least you'll move in a different velocity. We want to find those situations that you have the opportunity to have a high amount of opportunity to have a quick move. In other words, a velocity move through an area. So just moving on a plane, again, back to that, and you're kind of moving along and you're flying along, and there's, the captain's turned the seatbelt signs off and you're moving around the cabin, it's all fine. What we're talking about here is when you get to the point we want to be in a trade when the captain has the seatbelt sign on and you're not going to move, and you need to be prepared for something. That's really what's happening here, because that's where the money's to be made. So you're going to get these stop levels, you're going to get profit targets, and more importantly, you're going to have some levels that you can actually add on to. Where are the levels where you can actually add to a position if you're in it, and where is the demarcation of where you need to be out? The other thing that's important to look at, and then we're going to get into some charts here, is that when you look at this, you can really accentuate and enhance your understanding and your visibility of what's happening in a structure of a market or a position when you use the radar along with it, which is going to be a webinar that we do coming up on the 24th, I believe it is. So make sure that you sign up for that, because we're going to use those in conjunction. I'll show you how those look together. Okay, now here, let's take a look at this. So JCPenney, let's take a look at what's going on here. So let's go back a little bit. Hang on. Too much back. Here we go. Okay, so JCPenney, when you look at this, the main issue with JCPenney is, and this is just one example, by the way, okay, I want you to take a look at a few important features of this chart. And what I want you to take a look at, and I'll point these out to you, is that you have we'll call this a profile. You see that? The red area through the cyan color or blue to the green. We'll call this a flight profile. This is the safe zone, again, what we talked about before, in between here, where there's not going to be a lot of turbulence. You know what your basic parameters are. You could also call that a consolidation region. Very important to think about. This is where the consolidation is. You could look to trade a position in between that. So where if you want to be long, you maybe buy on the support, you sell on the resistance, again, the red line here, and then you look for it to break out, and if not, you then sell and short and maybe look to cover it down at the bottom, buy it again, and kind of moves back and forth. Now, understand something. You could see this kind of structure on any particular instrument, whether it's Forex, whether it's futures, whether it's a stock, and it all depends on the time frame you're looking at. But basically, what you have here is a total view of where the levels you have to look at. Now, I want to show you something here interesting. So you have a wide zone on the first profile here. And then let's kind of go to the July, August. You start getting a little bit thinner, but look at the difference here. You're much thinner, but what's significant about this is that you're seeing that there is not only is it wider, but there's a different level between the blue line there, the point of control, and the red and the green. And more importantly, look at back one again, and you see that there is the blue line is much more towards the higher point, the resistance level, which means that at the top there's a lot more potential resistance, a lot more playing there. So when you're looking at this, this is a culmination of all the volume, all the buying activity over this time frame, which you can actually put parameters in on the indicators, and we give you some ones that are defaulted to, which ones that we recommend or we suggest. But you want to actually look to, on a wide profile, look for very wide potential whipsaws around any of the areas, whereas you may not see that inside of a very consolidated one. One of the things you really want to look for is the continuation of wider to narrower to narrower to narrower, and then what you want to find is when it breaks below or above that narrow level, okay, when the profiles become much more constrained. When it breaks, it really moves pretty significantly, and we show that here. One of the other things you want to look at here is in this particular profile, and we're talking about the one that is extremely wide, and you can see why that is, but it really, if this was your sell point right at about 16, and then we had a new flight profile that was drawn again, you could use the $13 range for your support level. Well, what's interesting about this is that there is no, see, there's no green. Where's the green? Well, the green and the blue are actually the same level, which shows you that there was a lot of support at those levels. And if it broke down from there, well, you got to be really concerned. But you see what happened next. It immediately drew a new a flight profile, and then it was off to the races when it broke out. So again, just one example of this. Now, let's kind of go through a little bit more of this. So the red line that we talked about before is this top line here. You see this, the resistance. Okay, we call that resistance. Again, that resistance on a long position if you're long. And then you have to look at, okay, the control, this control point right here. Again, that gives you a good understanding of where the real level of buying interest is overall. Is it more towards the top or the bottom, and the width of that? So if you have a situation like we mentioned a moment ago where you have it all that is really very much concentrated around either the low or the high, and you have a wide box, you need to be very careful of the potential breakouts here. But this is suggesting that maybe there was something that could have been looked at as a good long opportunity for a while, and you know it was, and then obviously broke down. But you could have really played this through that. But here was the real killer right here. This is the real great trade. The trade when it finally broke down, and look how fast it moved. Right? It just exploded to the downside. Compared to some of these other ones where you have, a wide box and maybe some wide boxes behind this. So again, this gives you a really good plan. Okay, there's going to be volatility. Where do we want to trade it? Where don't we want to trade it? Where don't we want to be long? Well, we don't want to be long below the level of support. That's your potential breakdown zone. You don't want to be long down here. You don't want to even be, it would be nice to get long, down at 15 and then brought it back up here, but the fact is you really don't want to, because there's still a lot of potential downside there and a lot of resistance. And as you look across from right to left, left to right, what you'll find is you want to find those areas where there's consistency, and when you can look across the level that is consistent left to right and across. All right. Now, the main issue, again, that we want to say is that this flight profile is defined as the area between the red and the green line. And I'm trying to make this very simple for you. And by the way, if you haven't done so already, the opportunity for you to have these indicators, I'll just give you a quick link to this. I'll put this in your chat right now. You can get these indicators for free on a trial through TradeStation. It's a 10-day trial on each of these, and actually the Autopilot, which we have, which is a limited version of, the simulator is a limited version of our Autopilot you can check out too. And like I mentioned earlier, for those of you that weren't here that popped in, we're all recording this and we'll have this available for playback. Okay, now, here's a key issue. Let's take a look at this. In terms of the structure overall, and again, we're just focusing on one stock. We can talk about a lot of them, but we'll just keep it consistent right now. That when you look at the structures, we always look at time frames. Very important, because the longer the time frame, the more important that level becomes, because there's more consistency. And what we want to do is we want to take a look at those usually first. Okay, where's the level? And then we want to go next to, okay, fine, we know the level. Where are we then on the shorter, and how are we trading? Well, if we're day traders, we're going to be looking at a 60-minute, maybe a 30-minute, but we like a 60-minute level to be looking at. And then you maybe go up in 4x to 240-minute, and maybe when you're doing daily and then weekly, and possibly even monthly. As a matter of fact, I'm going to show you a chart in a moment, a live chart that gives you a really good example of what I'm talking about here. And again, we could do this with pretty much any particular, whether it's a Forex or a future, they all look pretty much the same. That's why we really like this, and why this is something that you need to have in your toolkit, these particular types of indicators where we're dealing with, really a see-through of the market with what's happening with the traders, where they're really entering and exiting trades, and this gives us this to look at. You can go as little as 15 minutes also, but again, we recommend a 30, 60-minute holding period, or at least a chart with that time frame on it. Okay, now, again, very important, because we're going to get back to this in a moment. The levels that we're looking at here within any particular profile on a longer time frame are the ones that we want to look at as areas that take precedent over the ones that are shorter. Because what happens is that when you find the trading, not everybody trades on a 60-minute chart or a daily chart. Some people have a very long-term horizon. And what happens now is that you're going to see that those particular situations will then dictate. So let's take a look at a couple of different charts. I'm going to bring up two that are, I think, very interesting to take a look at. Let me give me a second here, and we'll set this up. Okay, so let's take a look at this. This should come up in a second. I think it should come up. In a moment, we'll get this set. Maybe not. Let's move it over here. Technical difficulties. There you go. Sorry about that. Okay, so what are we looking at here? We're looking at Questcor, and what we're going to look here is at Questcor at a couple of different things. First of all, let's kind of sneak backwards for a second and give you the end product of this. Okay, so this is actually the altimeter. This is live, and this is a weekly view. Now, here's what I want you to know about this. First of all, we made the candles. We prefer to use candles, by the way, with this, because it gives a very good and clean, clear look at the price action. You could use bars if you want to, but candles are very good. What I want to really point out to you here is that when you look at Questcor, we put this right now at a gray color. We don't want to have the reds and the greens and all different things right now really detracting from what's happening. We don't really care if it's up or down. We don't really care what's going on right here. We really want to look at, more importantly, where the levels are. Now, this is what's really fascinating. So let's take a look at a few different areas. Right here, we can really point out that there is a level of interest that you could see. Let me point this out to you with the highlighter. Okay. So when you look at this structure and you see that you have a move that were these gigantic moves, and again, this is not the best, but I want to show you this particular stock for a reason. You can see that when it does break out, you have the opportunity to break above. Back in April, the opportunity to possibly go long here, and if it breaks down below, you need to get out. You could have used this as a nice little guide that if it came back down into a low point and a support zone here, and then you see that there's some resistance there because you look back a profile and the profile ahead, and you see that, well, at this point right here, there was some good amount of resistance, and once it broke up, it was an opportunity to get in. Again, once it broke down, you can see that, okay, it broke down. I don't know where I'm going to go play this. But what I want to show you is really this. You can see that it was waiting to break out. It broke out, and then broke out, and then there was another new profile drawn. These continually refresh and redraw depending on your time frame. And it did break down very significantly. And if you had this $60 level somewhere in your knowledge, and this is a stock that you wanted to have, well, you could have said, well, if it got down to 60, I would maybe look to enter it. Now let's go backwards here for a second, and let's go to the next time frame that we're talking about here, and let's talk about a 60-minute. Let's go and take a look at that. That should refresh on your screen. Well, you'll see that there was now a very clear way of playing this. Look at this. This is very simple to take a look at. You can see that there is a lot of opportunity to just simply look at the structure and find, okay, where the breakouts break above the red, the resistance, and then again, right here you could have gotten out because you have a new profile drawn. It broke down, you short it, and then right here you're playing inside, so you're really not doing much. You got out of your short and maybe in and out here. Broke down here, you would have probably traded it right around the 68 level, covered it about 66, and then it just hopping around. But the interesting thing here was, if you look at this, that at the lower quadrant of the profile is where your point of control was, and that may not have been the best place to really enter along because there wasn't a lot of great support there. So even though we did see that this 68 level has just been hanging around and hanging around and hanging around, but one of the things you do also notice is that below 66, there's nothing, right? Look, there's nothing down here. This whole region right here, there's just nothing there. And when you look at that, you have to say, wait a minute, what's going on there? What I'm seeing is that in this right there, there's really nothing much besides maybe we can point out that at about 65 there was something. But if you knew back in the back of your head that 60 was the support level, look what happened. You bounced right off of the 60, came right up. A new profile was drawn. Now I'm getting drawing crazy here. A new profile is drawn, and that's really a great place that you could have initiated for a quick trade. Now, at the same time, let's erase all this so we don't get all confused. Okay, at the same time, we can go up to the daily now and look at what the structure looks like there. Now, one of the things on Questcor you see is that you had this breakout above the 50 line or so, and what happened there was that you did see, if you waited around because you were getting tighter and tighter, you got some wide ones, and then you get tighter and tighter. If you took that breakout right about at before the earnings came out, and it was about 51, you would have had a nice little opportunity to get up to about 69 and change, and then you played it and kept it maybe in there until you saw a clear breakdown. And right now you're below the level, and it's not a place to be holding this. Now, another great example is Cliffs. Now let's talk about Cliffs for a second, because this is really tremendous if you look at this. Because let's go back to the shorter time frame. Let's look at the 60-minute. I mean, look at how beautiful this 60-minute works. Look, this is fantastic. Seriously, you had opportunities all over the place to make money here. You got a breakout. You could have picked up any time here. You could have picked it out right when it went above the secondary point. When you look back, you got a little bit of a compression here. Right here, you're still seeing that all the way through the points on a 60-minute chart. You're seeing that, well, you know what? The profiles are going down. So you're stepping down. You have profile 1, profile 2, right here. You have profile 3. They're all going down. Then all of a sudden you see a turnaround and you break out right on 9.5 and you move higher and you're moving outside of the zone all of a sudden. You get a new profile that's drawn here. These draw when there's a swing up and there's our calculation and our algorithm calculates the swings. And what happens here is, okay, you got out of that position, and now when it broke, you had the opportunity. You could see there is nothing to the left. See this open air? Open air. Smooth sailing, open air. You broke above, and look at that gigantic short squeeze that happened from 22 up to about 23.82, 24, $2, 10%. And then you would have said, okay, you know what? We'll get back in consolidation zone. I don't want to be there. I don't want to enter it. What's happening? Then you notice that, wait a minute, there's nothing above really to speak of here, above the 23 level, but look below, there's nothing there either. And that is another signal that you could have been getting short. Now we go back to the daily, and you can see the same kind of structure here. You see that there was a big break in August, moved up, and then we got topped out right about the 25 range or so. And then from there, what happened is you traded inside, in and out, and now you're back below again. The potential for a short position in this is really where it's at. So these are just some examples. I mean, you could take anything. We'll take the S&P 500, for example. This is the continuous contract. By the way, always use continuous contracts if you're using whatever platform you're on, but TradeStation, use the @ in front of it. So use the @ sign, and then ES, for example, for the ES mini. You can do for currencies too, whether you're going to use the JPY or the futures. So here's the Japanese yen continuous contract. Look how beautifully that played out. If you would have looked to in this particular circumstance, you saw there was some real nice consolidation that built up, and then it broke, and then you had the opportunity to play it. That's a pretty good move right there on a currency and a future. And then these profiles built just perfectly along the way, and if you just pretty much stayed along with this and gave yourself a little bit of a margin of the opportunity to be right or wrong, you would have been pretty good on this. This is on a daily basis. Now when you look at currencies, you can also look at, for example, the 240, which a lot of people look at. And 240-minute odd time, half a day technically, is a really good place to be looking at currency levels. These trade pretty much 24 hours, so it's a little bit of a different process here than a stock. But this is also a great level, and you go all the way back and you look for, on a weekly basis, I mean, this run, this drop that happened here, I mean, if you would have looked at this on a weekly basis, you could have said, well, this is really going to, this has some real legs opportunity, especially if you got under the 1.2 level here. Came all the way back down, and now it's in the consolidation zone, and the question is, where is it going from here? You did see something, and I'm going to zoom in on this because I want to show you this. Look how nicely this profile, I need to put a little circle around this one. Look how nicely this profile right here was built. And you can see that almost to the penny, there was see that right there, these two, this one and that one? They're sticking on their lines. Look how these were built considering not only past, but what we're looking at, the ranges in the future and where the volume is and where the play is. So when they stay inside, you really don't want to play them. It's when they get outside and they start moving and you got that move to the downside, and then you kind of exit it here and you wait till it comes back and it moves in. Okay, well, at this point here, it's a little bit outside, but it's really just not moving a lot. You can start nipping into this on the long side. Here you would say, okay, I'm out because, you know what, we hit the top, and look how the top's just set. And these do not recalculate once they're drawn, by the way, until there's a major swing and the algorithm changes. And then you have the bounce level that you could have bought at that point. Now, when you look at this on a daily basis, and we'll finish with this, and these weren't pre-planned. Let's go look at this, and let's erase all of our little drawings here. When you look at this on a daily basis, it's let's zoom out a little bit so we can see what's going on here. Again, same situation. As you see, there's very well-defined levels, and you can find that this works nicely. Now, just to give you a little bit of a preview of something here, when we look at the radar, and this is our radar, this is where you can see additional component to finding where the real opportunities are for these wide areas of movement and where they can move very quickly outside of their profiles, and then that's when you want to enter the trade. And then finally, we're going to talk about this on the 24th because when you look at that, you really want to understand how that works. I'll show you something also interesting. I'm going to take all of the indicators off here, okay, right now, and just show you what a plain chart looks like. And that's, you can see it with red and green and blue. You can color it any way you want here. But what I really wanted to show you on this was something else in what we call the Autopilot. It takes all the algorithm and basically gives you the algorithm in color. So again, without all the backdrop of everything right here, this is the Autopilot and tells you, hey, a yellow is, hey, you know what, wake up, there's something happening here that you want to maybe look to enter into, a long or a short. Gives you a point that is your level that you need to get out, which is orange. Okay, you see that? So you would have been, let me kind of just go through this very quickly. Maybe I don't know, a lot of you trade currencies. Let's go to an incorrect symbol. Let's go to the ES minis. Actually, let's go to Apple. I'd like to see what that looks like, just for the heck of it here. Okay, so this is a daily on an Apple, and you can see that what this is showing you is that when you have a red breakdown, you stay short until you turn orange, then you're out of the market entirely, then you went green and you went long, you're out of the market, you entered a short, quickly were stopped out or kind of moved out of it for no loss, no gain here. And then you sat out of the market for a while, and then you got back in short, and you covered here. So you covered at 410. You were short at, let's say, 435. You got back in at about 410, rode it up to about 430. Then you got short over here. Now you had a little bit of a oops over here. Somewhere you would have gotten out of this, probably for about a 20-point loss. You entered back along at about 440. Got out of that right here at about 467. Went short, had another little oops over here, but then went long, grabbed it all the way up to the top, and now you're out of the market. Just would have possibly gone short yesterday or the day before on this. Again, you can see this on any time frame that you're looking at in any particular vehicle. And you can look at this again on a 60-minute and see what happens here and how you would have played this on a much shorter term situation. A lot of people like to look at, for example, the European. We'll show you the future here. The European on a shorter contract is very volatile. And again, very simply, take a look at this and just eyeball for a second. We also have some back testing. You can see exactly what this looks like on this. But just eyeball this and see where this plays out. And now when you add this to, for example, the altimeter, you really get a good view of what's going on, understanding of where the play is happening. Gives you all the trades right there. So that gives you that. Again, we're going to be talking about this in the next couple of different webinars that are coming up. So I want you to think about that as what's happening here. Basically, when we look at the altimeter, just to kind of cover this real quickly, and of course, all this information and all the instructions are available on TriggerCharts.com and TriggerCharts.com right there. And also, this is important. I'll kind of give you a couple other things here. If you want to sign up for the next webinar, if you haven't done so, we'll probably send you an email about that. And if you are interested, I'm going to give you this link because this is important. On the rebate program from TradeStation, you can just simply take a look at this link that I just sent over to you. It's on the TriggerCharts site. And basically what you'll do with that is that you'll simply be able to get all of these indicators paid for with new accounts. And there's, even if you have an account, there's some ways to structure this so that you can go and use it anyway. But let's take a look. Let's continue on. Okay, when a price is in between these ranges, okay, the top line is considered the supply or the resistance, and the bottom is the support levels. That's important to understand. And if you get that in, and which side of the market you want to trade on at any time. When the price moves outside of it, of course, hey, that's where we want to look for a directional move, and that's something that we want to really look at. And the breakout occurs above or below the profile. There's a high probability that the directional move is going to be significant. So again, all this information is available on TriggerCharts.com and all the instructions and the components of this. If you do, in fact, go to the strategy network at TradeStation, there is an entire user guide with how to set up the settings and all that. We do give you a default setting, though, for everything. So that's good. I'm just going to go through this quickly because we talked a lot about this. There is a 10-day free trial for all of the indicators over at TradeStation. Again, it's just free. If you have TradeStation, you go to the Strategy Network, you grab it, and then you just install it, and it just shows up. There's not only do you get the indicator, but you get for your desktop, you'll get a workspace that you can have as well. If you do, in fact, review and give us a review on TradeStation, which we'd appreciate, we would give you a additional 1 month of the Commander series, which is like a $150 value. And you just give us a review on TradeStation, and we will set you up for exclusive access of that as well. And there's the link right there that I gave you earlier for this. And then, as I mentioned, you have these coming up very soon, so make sure to check out the event site on TriggerCharts. You have the radar coming up. Then we're going to talk about the Autopilot. Then we're going to put it all together on the 9th with the entire Commander series. And then we have the key resistance indicator that we're actually in development mode on. And our T-score, which is really kind of cool because it gives you a total technical score of what a particular stock or commodity is. And the key resistance indicator, which a lot of people have asked us for because it gives a great, it's actually a key reversal indicator. I don't know why it says resistance, but key reversal indicator, the KRI, gives us a great opportunity for a contrarian trade when it occurs. And really interesting to see that. And then finally, again, the rebate, something about a $3,000 value for that. So I think that's something that you can definitely use, and because they are offering this, we have this special program It actually goes up to about $5,000 total, but with our particular indicators, $3,000 will cover you for a while, and they'll pay for that. And of course, through the end of the year, you also have free platform fees. So that's pretty neat, overall. Let's see here. Now, any questions you have, please just send us an email, info@triggercharts.com. Just pop it to us so that we can answer you directly, and we'll give you all the information you have. And please tell some friends. I appreciate your, being there and spending some time with us today. And hopefully, we're going to see you on the 24th. So we're going to end it now. We're a little bit over. Try to do about a half hour, 40 minutes the most. So thanks a lot. We'll see you soon.